Okay, so welcome everybody to this morning's trading session or webinar with FX Street. I'd like to thank you all for attending this webinar. This was done on request from you good people that attend all of the FX Street webinars. You wanted to basically see what it was I do on a daily basis when I kind of come to my charts and get ready for some trading. And the type of trading that I do in the morning is day trading. It's short-term trading, and ultimately it's trading for an income. So whereas when you're trading longer term, basically you're looking to grow your account over a period of weeks, months, years. With day trading, my aim from day trading is to extract a little bit out of the market each and every day. Now, it's not possible every single day, but ultimately the aim is to be in profit 70 to 80% of my days, and that's more or less what I achieve. Okay? So before we go any further, obviously you need to say the content of this webinar is not investment advice and should be used purely for educational purposes only. All participants are advised to seek their own counsel prior to investing or entering into any trade. Spread betting and any other type of financial trading carries a high level of risk to your capital with the possibility of losing considerably more than your initial investment. The content of this webinar may not be suitable for all investors, and an individual should ensure that they're fully aware of the risks involved. And if necessary, you should seek the advice of your independent financial advisor. So a little bit about myself. My name's Alex Ong. For those of you that don't know me, I'm the co-founder of a website called Traders Corner-online. Been trading the markets for about 10 years now. Started off looking at FX and then branched into pretty much anything that moves. So in today's world, we trade FX, futures, equities, literally anything. Don't have a problem. As long as it moves somewhere and we can make a profit from it, that's what we will do. Basically being the guest speaker of various financial exhibitions around the world. I'm a trading coach and mentor. And if you want to follow me on Twitter, my Twitter handle is at Alex Ong UK. So before we get into the setup, I just want to give you a little background on my trading, how I go about what it is I do on a day-to-day basis, just so you have some context around what it is that we're going to do in a second. It's short-term trading. It's difficult, but it's profitable. The great thing about short-term trading is that potentially you can trade with a small bank but make large returns. It's not for everybody. Okay, it requires a great deal of time and fast reaction. So it's not the sort of thing that you can do where you get up and walk away from your screen for 15 minutes and come back again, because a lot of the time when you do that, the move will already be gone. Okay, now the key to short-term trading success is not being married to any particular trade or trade idea. So even though we do all of our preparation, which I'll show you in the minutes, the important thing to understand is that we listen to the market, we get in sync with the market, and then we go with the flow of the market. That's what this is all about. The other important thing is that we're so close to the market that longer term fundamentals have little impact on our trades. Yes, we look at the news announcements and everything, but in terms of a long term direction, we go with the shorter term themes in the market. Rather than the longer term themes, if that makes any sense. I'll take multiple trades a day. I'll accept my losses because I will have a lot of them. All right. We rarely have big winners. We have lots of small winners. We're taking little bites of the cherry, and often ultimately we take what the market gives us. We like to look for little reactions, to bigger levels. And I'll show you what I mean by that when we get over to the charts in just a few ticks. Is everybody still with me so far? You're all awake? Excellent. Excited? Yes? Good. All right. So again, just put some context around the way that I trade so that when the market's open in the minute, if we do get a tiny trade, you'll know what I'm doing. The market never moves from one point to another without stopping in between, right? In the financial markets, it moves in phases. This is what's known as price acceptance. So there are periods of time when the market absorbs the new price, right, and accepts the new price as fair value before it moves off in its direction. And it's those moments in time that I'm looking to take advantage of, because I know that I can't get in, or I can't predict the initial momentum move. If you try and predict the initial momentum move, the problem is you get lots and lots of false breakouts. So what I'm looking for is I'm looking for that first move to occur, and I identify that first move, and I'm looking for that little pullback within that first move to be able to get in and take my profits. All right, and that's what this trading is all about. And the moving averages do a great job in helping me determine where a value area is, and hence where I can get into the market for a good price, relative even to recent price action, so that I don't have to draw fibs on my charts all the time. And I, take some of the discretion out of it. I use moving averages, and ultimately, as you can see on this chart here, what I'm looking for is momentum in the market. All right, so we can see that the market's moving down here. Then I'm waiting for the price to pull back to within the moving averages. All right, I'm not going to dwell too much on the setup or anything like this here, because it's not about the strategy. This is about the preparation to allow me to trade the strategy. All I'm doing here is I'm putting context around it for you. Okay, so if it feels like I'm moving too quickly through this, I do apologize. It's just I'm conscious that the purpose of this webinar is to show you the preparation instead. Again, value areas in an uptrend. So once the moving averages signal that we're moving up, we're looking to get in when the market moves back to within the moving average. Notice here there's a big red cross, and there was on here as well. The red crosses indicate where new traders or rookie or struggling traders would look to get involved in a trade. They would look to get involved once they've seen that the market has already moved in a momentum move in a direction. They will look to get in up here, and they'll be getting into the move too late. What we're looking for is once we identify the move, we then want to see the market pull back and accept the new price as fair value. All right, because if you think about this psychologically, once you've been in a trade, and just think about yourself for a second, all right? If you've been in a trade since down here, for example, by the time the market gets up to here, you're probably thinking about taking some profits off the table if you're short-term trading. And believe me, these are very, very short-term charts. All right, so by the time it gets up to here, you're probably thinking of taking some profits off the table. So what makes the other traders that are already in this move any different to you? You need to try and put yourselves in their shoes. Put yourselves in the shoes of the people that are making the money. Because more often than not, it's the people that are making the money that are going to drive the markets. Now, if they've made some money here, they're most likely going to be looking to start to take some profits. And if they don't do it at that point there, they certainly will sometime soon. All right? So that's why we wait for the market to pull back. We wait for some of that profit taking to take place before we get involved in the trade. All right, so I have one setup mainly that allows me to extract money from the markets on most days. Just one entry indicator, and the rest of the trading decisions are based on price actions. It's based on the feel for the market, if you like. Now remember that the strategy that I trade, even though it has a positive risk reward, the main aim of it is to have a high strike rate. So I'm going to have lots of small winners, break-even trades. I'll even have a few small losers, but I'll never have a massive loss. All right, and there will be the odd big winner from a runaway market. So we're looking to take lots of bites of the cherry and often. All right, and this is what a chart looks like that I like to trade when it's in motion. You can see you got nice momentum in the direction of the trend, and I'm looking to sell on all of those pullbacks. Nice momentum in the direction of the trend here. So going up, moving averages indicate that to us. Every time the market comes back to within the moving average, or more often than not, well, it's every time because there's a little bit of a loss here, but most of the time the market comes back to the moving average, it will then make an attempt to go higher. And that's what we're interested in. Does that make sense, everybody? From a risk management perspective, my stop loss always goes beyond the high. So once the market pulls back, it will always go somewhere around here. That's it. That's where my stop loss is. If the market then starts to move sideways, I'll come out of the trade early. And so that I'll have a lot of break-even trades there. What moving averages do I use? The 25, the 55, and the 100 exponential moving average. Okay, so remember, day trading is about being active. You don't need to wait for your stop loss to be hit for you to come out of the trade. If you've been in the trade for too long and the trade's not doing what you expect it to do, come out of it, start again. And my take profits, for the most part, I will try and get one-to-one before we get to a high or a low. It's not always possible, but it is nice when that happens. Okay? I'm using range charts. These aren't time frames, so they're very, very short term. Okay, so on to the trade preparation. Here's the little checklist, right? And I'll take you through all of this. So the first thing that I do when I come to my charts in the morning is I check the levels. I try and develop some sort of a bias for the day. Okay, so I'll identify key levels. Levels that I either want to be long above or short below, or levels that I don't want to be trading into. All right, once I've done that, I'll look at the price action and try and develop a bias for the day. So I'll take a look at the price and say, well, yesterday was quite a big down day, for example. I'm expecting some sort of a continuation of that. Or equally, I could say, well, yesterday was a down day, but the momentum wasn't as much as the previous day, and we're at a support level. So potentially I'll be looking for some sort of a rebound here. Now, I'm not going to be married to this trade. If when the markets open, they show me something different, that's fine. I will go with that. But I'm just trying to build up a picture in my mind as to what the market could potentially do. Put some context around it. I then open up Trade the News. So I have Trade the News running all day. Basically, it's sort of like a squawk service that notifies me when any important news or any important announcement that may affect my trading comes out. And I have the audio on for that because I'm not looking at the headlines all day, headlines of Trade the News. So I just have the audio out there. I'll also check the headlines of the financial press, so looking at Bloomberg, things like that. I'm not looking to do any economics here. It's literally just a case of looking at the headlines, see what's in the market's view for the day, see if there's anything that's come out overnight that I don't know about that may affect the trading for the day. And that's pretty much it. So just trying to get an overall theme for the market. Then I'll check the economic calendar to make sure I know when the key news announcements are. It's not that I won't trade when there are news announcements, because often that provides me the volatility that I'm looking for to be able to take the profits. I just need to be aware of them. So I don't want to be taking a trade at 8.29 if at 8.30 there's some sort of big news announcement coming out. And then finally, it's about getting in sync with the market. Okay, so that means waiting for the open. Once the open's there, watching the market, seeing if it's ticking up, ticking down, what the sort of momentum is it reacting with some of the key levels that I've identified, and just trying to get in sync with the market, because day trading and trading for an income is very short term in nature. All right, and it's about, a lot of it is about your experience in understanding the pulse of the market, if you like. Does that make sense to everybody? Hopefully. Okay. So the first thing we're going to do is we're going to jump over to our charts and we're going to identify the key levels. All right. I will start that on the daily chart. Now, fortunately, on the daily chart, we're trading towards highs that we haven't been in a long while, so I can expand this here. Now, usually these charts have levels on them. I've just taken them off just for your benefit, so you can see what we're doing here. Okay, so I'm just looking for the key levels. I'm looking for the levels that are obvious. I don't care about these the highs and lows of every single candle. If you tried to get that, you wouldn't be in any trade ever. So I'm just trying to get the major levels in the market. And I'll show you what this can actually do, because yesterday this stopped us taking some pretty crap trades when we got down to this 11191 level over here, or 81, around this level here. We identified this on our charts yesterday during the trading. I took an initial break of a sell-off here, and when it came down to this level here, even though I got a setup, I didn't take that trade. Why? Because of this level here. Now, you can't see it because this is a daily candle, and eventually it did break through it. But had I taken that trade at that point in time, I would have been stopped out a number of times and probably would have given back my profits on the day. So identifying these levels is so very important. Okay? The day's high and low. So we're looking for turning points in the market. Areas where the market's come down to and completely turned around. And that's kind of it for the daily chart. Obviously, we've got levels up here, but the market's not going to get up there today. All right, so as you can see, it's pretty straightforward. We're just identifying the biggest levels in the markets. That's all I'm doing there. All right, and I'll keep an eye on these throughout the trading day. So we know it 11015. If the market gets down to that sort of level there, or 20, sorry. If the market comes down there, here's something we're going to be wary of. We're not going to trade into that level. By the same token, I don't want to be trading into the highs up there at 11190. If it gets up to that level, then we may have to stay out of the trade until it breaks through that level. And that's on the daily basis. We can then look at the hourly chart. Now, most of the time this will give us the same levels, but this just allows us to jump into the markets a little bit further and pick other levels that potentially we won't see on the other charts. Now, we don't want every level in there because you just never be trading. We're just looking for the major levels, okay? Does anybody else do this when they begin their day? Do you come in here and start putting in your trading levels? Yeah? Good, nice. Excellent. So again, putting in our trading levels so I know where it is that I need to be wary of. So we know, looking at this chart here, 11191, somewhere around there, that's potentially going to prove an issue for us. If it gets above there, then we've got 100 points up to 11292. So we've got a fair amount of trading, more or less clear water in here. And then going to the downside, it's really, we've got a long way before we need to be worried about anything. Apart from the day's lows, obviously. Now, from a trading perspective, we then need to develop a bias for the day. So we need to try and figure out where the market is going, what's the sentiment in the market. Now, looking at this chart here, if we look at the daily, from my perspective, it looks like it wants to go lower. So if in a few weeks' time the market is down towards these lows, I'm not going to be surprised. You can see that the market had that almighty uptrend there. Then when the Greek issues started to come in, we started to get some lower lows and lower highs. Now, the market did break through structure here. Okay, broke through structure a week or so ago. At this high here at 11652. But what we need to be wary of is what has the market done at that level? So it broke out above that level, but it didn't have any real momentum. If the market was truly positive, once it broke out above this level here, it would have used that as the catalyst to move the market further and further. But instead, on the day that it broke out, it closed relatively positively, which is great. Then we had a down day. Then the market opened up the next day, couldn't really go anywhere. This is screaming to us that the market does not want to hold above this level, right? Looking at this market here, on that doji there, you know that the market is bearish. It doesn't have the buyers above here to continue to push the market higher. So it's not really a surprise when the market then closed below that level the next day. And ever since then, you would have had a short bias until the market broke up above there. So going into today, yesterday's candle is probably the most bearish candle since that bearish engulfing candle up here. Probably the most bearish one because there was literally no upside yesterday. So the market clearly is quite negative. Coming into today, obviously based on this price action here, we still have to be bearish. If it starts to go higher, of course, we will take long opportunities. I have no issue with that. But going into today, we'll definitely have a bit of a negative tone about it. So if the market starts to break lower, that's where we're going to build into our position with size. If it breaks higher, obviously we'll take a position there and we'll try and get involved. But we're looking for extended momentum to the downside until we get down towards these key levels here. All right. So once I've identified all of my key levels, I then want to check the headlines. All right. One of the things that you can do, I don't do this so much, but something that you can do is basically just check the closes of all of the other major indexes so you can see what the world is looking like. And pretty much, excuse me, everything closed down yesterday. So there was nothing positive yesterday, which tells us with that amount of negativity in the market, it's going to be strong to have a big update. Not impossible, but it's going to be difficult to have a big update. So you can come in here, take a look at the news, see if there's anything huge on the horizon that you need to take advantage of. As I said, you're just looking at the main headlines. You're not really interested in things, laptop size solar panels as lighting. You don't really care about that kind of stuff. You're just looking at the big headlines, see if there's anything that could affect your trades. I then use Trade the News. As I mentioned to you earlier, Trade the News is a news service, a squawk service, and ultimately it allows us to get an idea as to what is going on in the market. Is that not going to load there? There we go. So throughout the trading day, I will have these guys talk to me and let me know what's going on, if there's anything that could potentially harm my positions. You then, of course, need to go to the economic calendar and check to see what's out. And this morning, there's nothing until 9 o'clock, at which point we have some Italian news, but that's fine. So there's nothing really that can affect our trades this morning. I trade the DAX primarily. There's nothing really here. There's no big ticket items that's going to affect my trading. Yes, I'm getting to that now. So now once we've done all of that, and I have my view for the day, all right. So now I've got my view for the day. I know what to look out for, which way I potentially want to trade, all of that kind of good stuff. Then it's the time to jump over to the charts and start looking at the charts that I trade. And I trade range charts, which are these babies here. Okay, so I know what levels I want there. And I know that you guys can't see this chart in the bottom right-hand corner because there's some, the chat box and stuff is over that. So I understand that, but there's nothing much to see here because I've pulled it all to the right. Anyway, this is the longer term chart that just tells me which sort of direction I potentially want to be trading in. And basically, this is where all of the magic happens. So we're about 4 minutes away from the European cash market open. That's when I start to trade. So I will trade from 8 o'clock in the morning up until about 9 or 10 o'clock in the morning for doing my day trading stuff, because that tends to be where I get the majority of the moves. Okay, so that's my preparation. each and every day. That is a preparation. Are there any questions? And obviously we will now wait till the market opens, and then I will show you the getting in sync with the market part of it, but I can't show you that until the market actually starts to open. So we've got about 3 or 4 minutes for some questions, if you have any. Which moving averages? The 25, the 55, and the 100 exponential moving average. I can't give you the exact setup on the range chart. It wouldn't be fair on our members, but I have given a few presentations for FX Street where I show you the majority of it. So if you like, if you look at some of my past webinars, you'll be able to find it there, primarily on the day trading stuff. I use NinjaTrader. Which time frames do I prefer? Well, I trade range charts, so there aren't time frames, but I trade the 2-point, the 3-point, the 5-point, and the 7-point range charts on the DAX futures. I don't trade millions and millions of pairs. I focus my attention on the DAX. So I've got just the one instrument here, and that provides me more than enough opportunities on a daily basis. So as we can see here from the futures open, the market did open up. Okay, so open slightly bullishly. However, we've now got a big gap down to here. The market hasn't been able...
The Shanghai close, it's currently off over 1.5%. And then we'll see some second-tier Spanish data. We've got May mortgage data. No estimates. The prior mortgage lending was up at 0.3%. The prior approvals were up 21.4%.
Okay. Sorry, so that's trade the news, and that's what that does. It basically shouts at me. Okay, if there's anything that we need to take notice of. There, in that instance, apart from data coming out, there wasn't much there. So what we can notice with this price action here is that we've developed a sort of channel, which is nice. So the market, even though it opened up, it couldn't find the momentum to trade in either direction. It's just sort of been ranging and channeling since the open.
Spain, May, total mortgage lending comes in up 15.1%. That compares to a prior 0.3%. Lending approvals 10.4% down from the prior.
So now it's 8 o'clock. The markets have opened. Now it's about getting in sync with the market. It's trying to... Hold on, let me turn this down. Okay, can you still hear me? Yes, no, maybe? Yep, cool. So now it's about getting in sync with the market. Now, remember, our bias is to be shorts for the day. We have a key level up here that we're going to be wary of trading into around there. So we need to take notice of all of this kind of stuff. The market is threatening to go above. As we said earlier, we aren't married to any one particular trade. We're just going to do what the market shows us. So we're just trying to get in sync with the market. Market's broken out above this level here. You would expect when the market breaks out above that level that we would have momentum there. That's what we'd be looking for. Get your trade. I'll get my trade tickets ready. So there's a couple of different trades that you could take here. We could take a break up or down of this particular level here if you wanted to. We primarily look for momentum, but if you're looking to sort of scalp very, very short term, there's the great thing about trading at key levels is that you're expecting something to happen. So when the market gets up to this high here, you'd expect momentum. So if after this little bit of consolidation, the market broke out above those highs, you could probably nick a few points there on the upside, just through the momentum through those highs, because there'd be a load of stops there. You wouldn't be looking for a massive position, but you would have been able to take just a few points there. That opportunity is now gone because it's broken down into this range, and hopefully what we'll see is a breakdown of the market, because that would be in line with our bias for the day. The other trade that you could have taken here obviously was the shorts from that level. So the rejection from this high here, the market didn't have momentum. That's telling you a story. It's giving you a clue. It doesn't want to be long above that level. All right, so the other opportunity would have been a short below 11123. I'm waiting for momentum personally, so I'm not going to get involved in that. But we're just trying to get in sync with the markets. We're just trying to understand what it's telling us. So at the moment, the market opened higher. That's one clue. It said that it was positive going into the open. Fine. However, the market hasn't been able to sustain that since. And the one attempt on the futures open to go higher so far has been rejected. So ideally, based on my preparation for the morning, based on the previous candle closes and all of that kind of good stuff, really we want to see the market go lower. That would be the ideal trade at this moment in time. But we need momentum there. We don't just trade because the market's meandering up or down. We trade when there's momentum, because that's when we have the highest probability of success. That's when we have an idea of who's in control of the market. Total, I mentioned a few times, I don't have time frames. These are range charts, so they're not based on time. So that's the 2-point, the 3-point, the 5-point, and the 7-point range charts. I don't trade in the Asian session because I'm asleep. So are there any other questions whilst we wait for the market to show us its hand? So now the market is looking like it's going lower. And what you need to take into account here is that this is the second time the market's got up to this high and failed. Now this can mean two things. One, we're either primed for a drop here. Okay, so if selling pressure builds up and we get lower lows, we can expect the market to break through these lows here at 11099 and then go significantly lower. Two, if that doesn't happen, okay, and the market kind of comes to a climax, if you like, and starts pushing up here. Once the market does get above this level, we could be looking for an explosion to the upside. So either way, I'm happy to trade in either direction here. But the nice thing is that the market is building for a big move. And this is what professional trading is all about. It's about building a picture, all right, anticipating what the market may do, putting all of those clues together and building a case for a trade. Not about inventing a trade. I'm doing what the market is telling me, if you like. Rookie traders would have lost potentially a number of trades here already. They would have tried to go long above that level, short below here, long above. They'd wait for these momentum moves, then decide that the market's moving up and then get involved. We aren't doing that. As professional traders, that's just a bit stupid. Okay? We aren't doing that. We've got our setup, we've got our bias, we understand what our game plan is for today. Now it's just about execution. Okay? Does that make sense to everyone? Are there any questions? The market's going lower. At the moment, I've got a small little position on. And break through those lows. And I'm going to come out now. I'll wait for the pullback. I just took a tiny little trade here through those lows. Just to start to dip a toe in and get involved in the markets. But now my bread and butter is I'll be waiting for a pullback. Now I won't get involved in this pullback here because that's directly into this level. So just be a bit thick. To try and take that trade there. I need to wait for the market to move through that level. Longer term charts are more reliable. It depends what your time horizon is, Michael. So these short term charts are very reliable for myself. Being able to read what the markets is doing, for me, it works out quite well. What happened to my trade? That's odd. Just took a trade. Took profit and it hasn't updated on my broker feed. How does that even work? Oh. Some research hasn't updated the equity. Sorry. Where are we? Okay, so are there any other questions about what I've done here? You sort of getting an idea as to what's required. Does it differ somewhat from what you do, or is it the same as what you do? It's different. Is there something you feel that you may try and incorporate into your day trading? Because I promise you, getting your head into the right place in terms of your trading is something that will really, really help your bottom line. Now look at what the market's telling us, by the way. It's then now attempted to go lower here. Remember I said, someone asked, are we going to trade that pullback? I said, no, I'm not going to trade it here because it's directly into this low. The market hasn't proved to us that it can go lower. If I did try and get involved in a pullback here, I would have been stopped out by now. So it's about taking the whole chart into context. Just because my technical setup said to go short here, because this is a valid technical entry for me, this pullback. Just because it said to go short, I didn't take it because it was in the wrong location. All right. No, I don't trade economic events specifically. I don't mind trading them. They can be very profitable, but I don't wait for an economic event, if you like. I'll look for a pullback on any of the ranges. So the market hasn't really shown us its hand yet. And this is what getting in sync with the market is all about. But this isn't a bad thing. It's not a bad thing at all. We like this sort of consolidation, because then you know that once the move has happened, there are enough traders behind it to make sure that it's an extended move, to make sure that it's a move that you can make money from. You want this sort of coiling price action. This is great to see, because once we get the eventual breakout, that's going to be good for us in our bottom line. Okay, so I think we're coming towards the end of this webinar here. I hope you've all enjoyed it. Oh, I'll wait. I trade for 1 to 2 hours a morning, Stefan. So by about 10 o'clock, if nothing much has happened, that'll be me done for the day. Yes, Vikrant. So I exit using the same chart as I enter with. So I might get an opportunity here. But we are coming towards the end of our webinar. So I'd like to thank everybody for joining. I hope you found, I know it was very early this morning, but as I said, it was upon your request from one of our previous webinars. You said that you wanted to see what I do, how I set up my day. So I hope you found it useful. And I'll be doing another webinar later on this week for the FX Street Premium, where I talk about another concept, which is quite an important one. I think it's one that you'll like, which is the concept of multiple positions actually mean less risk. Okay, so maybe check that out. But otherwise, and the market's going short here, so I'll wrap this up quickly so I can get involved in this. But otherwise, thank you very much, FX Street, for having me. It's been a pleasure, as always. And I look forward to doing our next webinar later on in the week. So thank you very much, everybody, for joining. Really appreciate all of your time. I hope you found value in it. I hope you take away some of the stuff there and add it into your own trading. This market is now going shorter, and I'm going to look to see if I can take advantage of some of these moves. So I am going short now, not right at this second, but that's what I'm looking at right now. Okay, so have a good day, everybody, and I'll speak to you all soon.